Good day, everyone. Well, we see that we're still in an uptrend. The major averages, with the Nasdaq closing at new highs recently, and the S&P firmly above its 50-day moving average. At the moment, gold has been selling off for the last 3 weeks, partly due to the Syrian issue being less of an issue. As Obama seems to more amenable to compromise. And also, I think probably telegraphing an extent of the tapering that should be coming sooner than later. Gil says warbling.
A little bit of
about
warbling there.
now?
You sound okay now. You sound okay
Okay.
now. But I think everybody
Yeah.
kind of got the message there.
Okay.
Market's in an uptrend. Gold coming off. Gold and silver getting pummeled, actually. And Dr. K, that seems to me like it might be telling us that some tapering is coming. Is that
Yeah.
your take?
Yeah, I said the tapering issue is on the table, but they have ways to work around it. I mean, if the economy is not recovering as they wish, they can still taper, but in a way that is minimal to impacting the markets. So they have a wiggle room, and politically, they have to say that they're going to start tapering this year because people are concerned about all this money printing that's been happening. But
Right.
they know full well that they can also taper in a very mild sort of way if they wish. And the price of gold and silver, of course, are well off their peak. They had a nice run in August, partly due to the Syrian conflict, and now that you'll see in the August uptrend, these precious metals are now giving back those gains in preparation probably for tapering that will start sometime this year. And we also see an issue. It's not really. It's more of a global economic recovery that is seemingly around the corner, as witnessed in countries such as China and Germany, where the central banks in, say, Bank of England and European Central Bank may also start to slow their money printing as a result of this turning of the corner. So the price of gold and silver could also be telegraphing that slowdown as well, not just from the Fed.
So, Dr. K, could you? Someone's asking a question. Please explain your rationale between QE and the current movement in gold and silver. I think it's just something we've talked about like a million times, but you want to kind of cover that real quickly?
Yeah, when you have a lot of money being printed, that means currencies devalue, and so hard assets are going to appreciate in value. And hard assets would include gold and silver, various commodities that are more prone to that, real estate, and certain stocks. So by the Fed slowing down the pace of money printing, we're seeing signs of hard assets, especially in the very sensitive precious metals area, come off in price.
And you can see in the price of gold here, I'm looking at a weekly chart of the gold futures, the nearest contract. Back in 2001 is really late 99, 2001 is when gold started to make its turn and started heading higher. And if you recall, you had the easy money policies of Alan Greenspan going into 2000, and then after 2001, they dropped interest rates sharply as a result of 9/11. Yesterday was actually the 12th anniversary of 9/11, for those of you who aren't aware, but I think everybody probably is, given that it's been all over the television. But in any case, after 9/11, the Fed implemented easy money policies again, and of course that set the dollar off. And then once you had the you had a correction in 2008 in gold that coincided with stock correcting in late 2008. And as well, you had 2009 where they started at QE, and so we've seen that relationship going on. More recently, there's been talk of QE tapering, and it may be that a lot of that has worked its way into the system, and so gold starts to top here and correct. So that's the relationship. It's pretty academic. So I think if you have any experience in the financial realm or you studied economics in college, you know that when money is being printed, fiat money is being printed, that's going to drive the prices of hard assets higher, and it's also driven the prices of stocks higher as well. So that's a basic mechanism. So it's not really rocket science. And I should also point out it doesn't, in the short term, you know, in the microenvironment, it doesn't always hold up 100% of the time. There will be times when gold and the dollar move together. And so you'll have periods like that. But in general, the macro trend is, you know, we've had easy money policies for most of the last decade or so, and that has resulted in a steady rise in a bull market in gold and silver as well as commodities. So, anyways, so
I point out that you notice how linear the graph is on that long-term gold graph.
Yeah.
And that's of course a log-based plot,
right.
which emphasizes the linearity. In other words, the percentages, it's gaining a fairly steady percentage year after year in this easy money environment.
Yeah, and that's really been the case. And you know, it doesn't seem to be, it hasn't let up yet, but if it does, and it may be that, you know, gold is telegraphing that. I tend not to think, Dr. K, that the move in gold more recently is a result of the Syrian crisis, because gold bottomed in late June, and it's been in a rally since then. You had a little upside in here on a couple of days when you had the Syrian news, but it seems to me like the movement off the lows was not based on the Syrian crisis per se. And at this point, I think a lot of the Syrian stuff has been defused. And so at this point, where can the news surprise you? I think on the downside.
Yeah, the move off the bottom is a very good clue that we got the bottom in June. And, you know, some could argue, well, it was oversold. And that's part of the bounce. But it went all the way up to its 200-day, if you look at GLD. And then it backtracked a bit, which is pretty normal action for that kind of a bounce. And then we had the Syrian conflict, which you know, that obviously that gave some excuse for gold to rise. But if you look at the whole picture since June, we're seeing more evidence that gold is telegraphing that the easy money period is coming to an end.
Yeah, actually, gold, the GLD never got to the 200-day moving average. It got to a midpoint, and that's as far as it got. So, but, you know, I think.
Wait a minute, I'm looking at the daily on GLD.
Yeah.
And so the daily, it got to. Oh, you're right. It was 50-day. That's right.
Right. It got through the 50-day, and now you're back down to it, and you're gapping down pretty sharply. So I don't know. To me, this looks like maybe a little bit of trouble here. And maybe it's telling you something's coming up. I think with the market, my take on the market is that you had support on the NASDAQ along the 50-day moving average, and you've moved higher now. You've broken out, and I do think you have to watch out here, given that a lot of stocks, particularly the ones that we've seen recently having pocket pivots, Bible gap ups, etc., which have happened over, say, the prior last week to 2 weeks, and these stocks are already pretty extended. So you notice yesterday we didn't really see any Bible points in stocks or buy signals or, you know, actionable buy signals and whatnot yesterday. So it tells us that you're slowing down a little bit here. You've moved to new highs on the NASDAQ, but you have not moved to new highs on the S&P. So some people bring up the fact that isn't this a negative divergence? Yes and no. I think right now the NASDAQ has been leading, but it's had some help from Apple coming up, you know, up to the 50-day moving average and moving higher. And so that's helped the NASDAQ outperform, I think. And with Apple now tanking and getting hit, yeah, this could become a short again, actually. I think that you've got the assistance of Apple is off the table now. So you're seeing the NASDAQ was lagging yesterday. It was actually been hanging out relative to the S&P, which is trying to move higher.
S&P groups that did well yesterday as well.
Yeah, so, you know, maybe there's some catch-up being played. I don't know. But I would say, you know, at this point, the breakout's now obvious. You know, your favorite newspaper is telling you that market's now in an uptrend. And you know, these stocks, so a lot of these stocks have already had moves. So my view is, you look for some pullbacks here. Maybe you can be opportunistic on the pullbacks if they go into or move into logical areas of support, you know, such as a moving average or the top of a prior base. But I would not be loading the boat up now that somebody's given the all clear signal, because I think the market could back and fill in here for a little bit, particularly going into next week's Fed meeting and policy announcement. And I think that gold and silver down 4%, really getting smacked, and gold getting smacked as well, maybe telling you something, and then we'll see how things pan out after the meeting next week. So somebody says, with Lulu being so cheap right now, should we do what the standard institution does and buy on the dip? Actually, that's about as wrong as you could possibly be. Standard institutions don't buy on the dip in reflex manner. Retail investors buy on the dip because brokers will call them up and tell them, hey, Lulu's on sale. Come in and buy it. And I would say you're a fool if you think that institutions are buying Lulu today. They're selling it. And they've been selling it for a while, because you can see the break off the peak here, massive gap down on huge volume. Then they leave it alone for a while, so it has an opportunity to form a right shoulder. And now you're starting to break down. I draw a neckline on this, and I'm going to ignore this big bump here and draw a neckline on this along these lows, like we did in the chart that I sent out earlier. And I'm thinking you're going to head for the neckline from here, undercut this low, which is 50, I forget what is in here, 59.60 on the low, maybe undercut it by a little bit and go lower. So I'm assuming that's a joke, whoever asked that question. Lulu being so cheap right now, should we do what the standard institution does and buy on the dip? You obviously have no clue what institutions do, and you obviously can't tell if you're serious. And I'm assuming it's a joke.
Yeah, that's not a dip, that's a gap down.
That's got to be a joke. I mean, because institutions are dumping this stock, and you can see it in the charts. If you understand how to read charts, you know that's what's going on here. So you don't want to be long this turkey, but I do think that what happens on a day like today, and I consider today a shortable gap down. I don't know, now you have a discernible high here at 65.40. You find some support along these levels. It makes sense for it to try and rally, but from here, could it rally back to the 50-day? Maybe, but I would expect that with this breakdown showing up as a breakdown in the right shoulder. Get rid of this pen thing. It's headed lower one way or another. So to me, this is a thematic short, and you don't see those very often. One of the things about short selling is that the prime opportunities show up in maybe 1 or 2 or 3 stocks. And if you look over the last couple of years, stocks that have had beautiful short selling opportunities would be Green Mountain Coffee here, which was a big leader, and this one topped back in 2011, and we caught this one, I think, in early 2012. You can go back and look at the short sale setup alerts, and I believe back in March, I think, or late February, one of those periods there in 2012, we caught this one perfectly, and it blew apart. We also caught Netflix way back here. Netflix is rallying now, but we caught it way back here on a shortable gap down. Let me go back to that. That was in 2011 as well. Let's go back to the daily chart. And this was the shortable gap down day. And it basically broke down from you can see left shoulder here. Let's see if I can make this a little bit easier to see. Left shoulder here, your big head, now the right shoulders. It also had violated the 50-day moving average up here. So it's even possible, if you wanted to anticipate this, you could have shorted a little bit earlier. Because Apple was getting pretty long in the tooth, and when people are telling you they're going to buy it up here, not Apple, I'm sorry, Netflix, people getting excited about it up here is making new highs. When it starts to violate the 50-day, it's possible you could come after a short here, but a lot of times you just want to let the pattern play out. And here's a shortable gap down here, and that worked pretty well. So, I'm trying to look at Lulu as having that potential, but you're going to get a little rally intraday, and it's going to hang up. It reminds me a little bit, in terms of a gap down after earnings, a little bit of Restoration Hardware. Yesterday it was hovering around the 50-day at about 70, 71. It was hovering in there. You saw it start to try and rally, and then by the end of the day it broke down and headed down to, lo and behold, the 65-day exponential moving average, where it's finding support. It's also getting down to the lows of the base. But the other one that was a thematic short was Apple back in in 2012, in late 2012. You had the head and shoulders and then the breakdown here that took it through the neckline, and that worked out pretty well. Stock went below 400 eventually. But these are thematic shorts. They occur in big leading stocks: Green Mountain, Netflix, Apple, and I think Lulu Lemon has a potential to be another one of those. If we look at the, you see the intraday chart, the 5-minute, you can see basically it broke down, it's rallying and trying to hold. The volume, you're seeing some buyers come in, the bottom fishers are coming in. They're going to have to work their way through this, I think, before it rolls over. You might try and use a 620 sell signal, but you notice it's just kind of hovering along the line here and not really breaking down. But I think what you do is you just put some out if you want to get short this thing and use the high of the day maybe as a quick stop. It's not necessarily guaranteed that it's going to break down from here and close lower. It may take a little bit of time, but I think what you've got on your hands here is a thematic short as opposed to a tactical short. And on that basis, I think the stock is shortable in here, and we'll see if it, how the thing acts from here. Anyways, let's see. Thoughts on Tango? I'm just going to run through some questions. We'll get that out of the way. I don't know what thoughts one can have here. I don't have a crystal ball, so I can't tell you if this is the peak. It's just in an uptrend. You had a breakout here. Pocket pivot type breakout off the 10-day, and it's been going up from there. So other than that, I don't, there's really not too much to think. If you think you have a nice profit in this thing, 10% or so, or 15%, you want to take it, I guess you could. But I don't really have any thoughts per se. So,
I mean, the market's been pretty tricky, and thin names like this, I mean, at this current level, it could keep going, or it could have a very, it could have a sharp pullback. Market cap's under $1 billion. The earnings look good. Industry group is ranked 6, so things look good on this. But this is kind of market where you almost have to do the reverse of of trending markets, where the trend really isn't your friend very much because it's more fair weather, and this kind of gain almost you want to just take the gain and leave it at that, or maybe take half off the table.
Right, and so you might consider something like that. But thoughts are just thoughts. They don't really mean much anything. You got to operate on the basis of concrete price volume action. So let's say if you bought this, you set an upside target of 15%, you're going to take a profit. Well, maybe this is where you do it. Somebody's asking about Angie as a short sale target. I don't know. It trades over 1 million shares. It's I guess if you wanted to try and short it here, you could, but I don't know if you're guaranteed success here. It's not really, to me, a thematic big leader. I mean, it had a move here. It's coming down on top of this big structure, and you're down at the 200-day here, the 40-week moving average. So I don't know. It's not one I would go after. If tapering is coming, why is MDM long, Dr. K?
Because it follows the trend and it doesn't try to anticipate when the tapering occurs. It doesn't anticipate Fed what Bernanke's going to say or what the other central banks are going to do. It just looks at the price volume action, and there's been enough strong action on the part of leaders that put the model into a buy signal. And keep in mind that these uptrends can continue a lot longer than we think, even if they're weak ones, especially as long as QE is continuing. So it's better to be on the right side of the market. And right now it's been telling us just to be on the long side. But these signals, can be very short-lived in these kinds of compressed environments where you get a lot of sideways action as well. So, the model's not going to stay on a signal if it senses enough of selling pressure coming back into the market.
Somebody asks, how much trust do you put in the China data? I don't really go around trusting data or looking at data as something I have to trust or not trust. To me, any data coming out of any government is subject to manipulation. What's more important to me is the price volume action of the market and the way stocks are acting, not whether I want to trust data. But China's a communist country. How transparent are they? But I don't really think you need to get into a position of trusting or not trusting data and looking at it that way. Somebody asks a decent question. Wouldn't Asian gold buying be a factor to support gold and silver? Well, yeah, they'll buy physical gold and silver, I think, and that will be a factor that does provide some support. Whether that can trigger a big rally here is another question. So, but yeah, that is a factor. Just how much of a factor is, that's an open question. Potential head and shoulders top on the Dow Jones. I would say that I don't pay attention. You can even say on the S&P, you know, if you want to say there's a left shoulder, here's a big head, and these are the right shoulders. I don't really pay attention to head and shoulders patterns on the indexes because I've seen periods where, you know, let me just go back here. Let's go back. Come on, baby. A little bit slow here. Are we in 2010 yet? Here we go. In you know, in August of 2010, you had a head and shoulders, and the indexes look like they're going to break down. Turns around and starts to rally. So much for that head and shoulders. If we go back to December of last year, you can see that the S&P formed a little head and shoulders, and some people, of course, will bring that up. Say, "Oh, isn't that a head and shoulders?" That's tough, and of course, that leads to a rally. So I wouldn't pay any attention to head and shoulders formations on the indexes, and I don't think you really need to have to worry about that. I look for the pattern in leading stocks or stocks that were former leaders, like a Lulu, that are breaking down from a head and shoulders pattern. That's a little more telling. So all that says you don't pay attention to any of that. CCI, hi Gil. CCI, we never bought dips. CCI? What is Crown Castle? I don't really understand that question. RH as a short. Well, yeah, I think it's a failed base here. It's hard to say though. You know, these guys came public here, so you have one first stage breakout from a weird looking base here, and then a second stage breakout. But you know, I don't go around slapping a label on a base. It's first stage, second stage, whatever stage. Once it fails, it's potentially a short, and this is an IPO situation that had a big move higher, and now it's failed here. So it rallies back into the 50-day once. It might break down further. So it's possible it could be a short. It trades 906,000 shares a day, so not really the sort of situation that I would short because it's too thin for me. But you know, if you're going to short a small position, it might be shortable here using the 50-day as your stop. Zoom. I don't know. It's a thin little stock. Trades 266,000 shares a day. Is that right? Or maybe 300,000. You guys hear me okay? Dr. K?
Yeah.
Yeah, okay. Someone says
About
losing you
385,000.
sound-wise. It could be your own internet.
No, you're
a lot of people
fine from on my end.
Yeah, a lot of people don't you know, have the same issue. But you know, Zoom, I don't know. I'm not a buyer. It's a thin little stock. They're running it up. So I'm not a buyer. DXCM, what is this? Probably some thin thing, right? Yeah, it trades 534,000 shares a day. What's happening here? Dexcom, it's trying to break out. It had a gap up, so I don't know. I'm not a buyer here. That's not a buyable gap up here. It's not a pocket pivot, so I don't know. This is a thin little stock. I'm not a buyer myself. If you like it, go for it. But I don't really care much for it. iRobot trying to turn. Nice little, you know, bottom fishing pocket pivot coming up to the 50-day 3 days ago. Volatile stock. I think they missed on earnings last time, and you had negative 19% earnings growth. And next quarter, they're looking for negative 55% earnings growth. So I don't really care for this.
There's a lot of issues with the earnings, that's for sure.
Yeah, the earnings numbers suck.
And it's not a it's not a leader based on its price action either. And it had a big drop after its prior earnings report. So there's lots of flaws with this stock.
Yeah. Somebody asked, do you think ACAD, Acadia Pharmaceuticals, has similar action to Splunk? Well, that's what Splunk looks like. You know, it was coming off here, and then you had a viable gap, and it's going higher. I think stock's got a short-term top here myself, but I'm not sure how this is similar to ACAD. I don't really see any similarities, so no. On a weekly chart, Spewer is starting to look like Head and Shoulders is the right side shoulder too high. Well, you could say, you know, here's your left shoulder, here's your head, now it's forming the right shoulder. Here's the peak of the right shoulder, so it's kind of right there. You know, I don't know. It's a little bit of this, a little bit of that. Maybe it's forming the peak of a right shoulder here. I don't think it had a big move, but it wasn't really that big thematic kind of leader that all the institutions are piling into, because the whole idea of picking on these big leaders from a previous bull cycle is that the institutions have piled into them. I'm not sure how much they piled into this one, although you could try shorting it here, use the high of 3 days ago, I guess, at 24.60 as your stop. That's kind of a ways away, but it's possible. And I have seen patterns where you get an ascending neckline where the left shoulder is lower than the right shoulder. Those can work. They're rare, but they can work. And if they do work, it'll tend to be on a stock that has had a crazy move to the upside. So, possibility. New Skin continuing higher, but I'm not sure what I'm supposed to say here. You had a breakout pocket pivot here, and it's just moving up, pulling back a little bit. Volume is light, nothing really special there. Some leaders are trying to hold up, and I would keep an eye on the ones that can. Pandora, crazy stock, gapping up today. I don't know. I don't really care much for this stock, but if you like it, I guess you're within viable gap up range. What did they do anyways? Was there some news about a buyout, or let me check this. What do you know about this, Dr. K? Does this one thrill you?
Let me look. I'm just looking into it right now. I've looked into, the whole. It's good group. The earnings aren't
they announced
anywhere.
a new CEO, so they announced a big deal. I don't know.
Okay, then there you go.
I don't know. I don't know. I'm not. Last quarter earnings up 300%. I think it's next quarter expecting 20%. Sales are growing at 55%. Yeah, I don't know. I don't know. You could try it. Just use the low as your.
Yeah. There's flaws. It's flawed. And that gap down that it had on August 23rd doesn't give me comfort either. So it's gapping up on news of it's not so interesting.
Somebody's asking on your stocks on left below Apple and RH. There's an O. Sometimes there's an R that shows up right here. RH. An R means there's a restriction on it, I think, on short selling. That might have been yesterday. I don't know. But I don't really pay attention to that. It's an e-signal thing. ARMH looks like a good buy. I don't know. It's trying to come up the right side, but I don't think I would buy it up here. So. Somebody's saying CCI. Well, I don't know. I'm not a buyer of Crown Castle. This thing looks like a big, ugly head and shoulders weird thing. I don't know. I'm not into that. Somebody in the chat room probably mentioned it. I don't think that was his company. So if you're talking about Bob from the chat room, no. Let's see. Continuing now. AVG still viable. I don't know. You had a pocket pivot here, so that's where it would have been viable along here, I guess. But I don't think I'm. Yeah, it's a thin, small stock. It's within range, I guess, if you want to buy it. PERI. It's a really thin stock. It's pretty erratic. So you had this, erratic kind of move back up to the highs. You've got resistance up here. I'm not into this stock. It's too erratic, too choppy. It's got some decent fundamentals, but if the fundamentals are so great, why isn't it acting more consistently? It seems to be kind of junky, actually. So I'm not really into it. Q-Core, I think, is probably a toss because of the breakdown here. There was some talk yesterday about somebody putting out some comments about it. My view is if you had a breakout on a pocket pivot and it can't hold that, you certainly don't want to be there. It should have held the 20-day in my view, and once it couldn't, I don't think you really want to be there. So I don't like this myself. SodaStream has been trying to come up the right side. You had a pocket pivot sort of move here. I really don't know what to think of this. This is just a very erratic, choppy pattern, so it's really not something that I'm interested in. Somebody asks, when a stock gets a juicy bounce off of its 20-day moving average, is that more of a scalping type of play to cash in on some upward momentum? The bounce off key moving averages a tell that an institution is coming in to support the stock. All I can say is in this environment, I've noticed that stocks will find support at the 20-day. It might happen a couple times. You know, Tesla does. So you're trying to get support again at the 20-day. I don't know what it's telling you as far as institutions trying to buy it. It could just be bouncing along here after this higher volume break 4 days ago, and it's going to go lower from here. I don't know. But I will try and buy stocks off the 20-day sometimes, and then depending on how they act from there, maybe it's a short-term trade, maybe it's something longer. I don't know at the time. But I would think that if you're looking to buy stocks and they're coming into the 20-day moving average, then you could easily have a situation where that's a buyable pullback, and then we're going to see it hold the 20-day moving average. But it's not something that is deterministic in that, oh, look, the stock's bounce off the 20-day, so it's a buy and I can hold it forever, or it's definitely going to work. Everybody wants some sort of hard and fast rule that tells you buy here and it's guaranteed to go higher. So I think in this case, the 20-day might work in some stocks, and then you got to it's got to hold it as far as I'm concerned. But I don't, and how you're going to play it really is up to you. Good pattern for HLF. I don't know. This thing's subject to so much news. This is what it looks like. It's a big, ugly pattern. Almost looks like a pod to me. Punch bowl of death. So I'm not so sure. I don't think I'd be buying this stock myself. How about you, Dr. K?
Well, this is a stock that's been quite choppy and it's had a lot of problems, and it's trying to have that support on the 50-day. The earnings are they're slowing a little bit. So are sales. It's not institutional sponsorship has been very erratic. Doesn't have enough. Doesn't tick enough the boxes for me to really be that excited about it.
Yeah, so I don't know. It's subject to a lot of news, though, and the thing's been all over the place. Last quarter earnings were up 29%. They're expecting 10% growth next quarter. It doesn't really thrill me. ACT. Well, you had a nice move, and it's trying to break out, and it's sort of dropped down. To me, it's a little bit. I don't know. I'm skeptical of this one right now. It's been kind of, you have a move up and there's not really much momentum, so it doesn't really thrill me. I guess if you want to try and buy this pullback in here, you could. Noodles is holding the 20-day line so far on the pullback, but this could end up just having a base for a while. So if you buy it here, I don't necessarily know if that means you're going to score and make big money here. So, I think it's still a developing situation, and it's holding the 20-day where it was viable. I think last week, right during the webinar, we talked about buying it. I think at like 44.28 is where it was trading, and it did move higher from there. It's probably all you guys pushing it up, but I hope not. But stock's kind of hanging out along the 20, and that's about it. Tesla, we already talked about that. It's trying to hold the 20-day moving average. We'll see if it does. It got hit with some volume. There was talk of that professor out saying that Tesla's worth $67, but how many times have we seen that? The stock got hit for a couple of days. This is actually the day 5 days ago on the chart when the news came out, but led to pullback to the 20-day. It's on the top. If you think this is an ascending base, and we've theorized that it is, the one thing I don't like is the fact that if you get an ascending base, you break out, the market's moving to higher highs on the NASDAQ. Why isn't this shooting out here? It should have more thrust, I think, on the upside. And I'm a little disappointed that it doesn't. And so on that basis, maybe it needs more time. But I'm not sure I'm a buyer of Tesla here just because it's holding the 20-day moving average. Blocks. Would you call this recent move parabolic? It's had a big move, so you're sort of running up. You had a viable gap up. I don't know if it's parabolic. Let me get out my parabolic template here. But it's going straight up, so it's getting a little extended on the upside. So it's probably entitled to build a base in here somewhere. I'm just not sure whether that means it's got to come crashing down or not. But it's kind of up there. If you bought the viable gap up, you're up a good possibly 15% or more. On this thing, so the way this market's traded, maybe it's something that you take some profits on or partial profits on. But that's a strategy or stance you can take with just about any stock. Of course, it's been running up, pulling back. You know, I don't know. I'm not this stock. I think it's just kind of a little bit erratic. It's been moving higher, but I don't know if I'm a buyer of this thing here. Does the chart look like it's trying to roll over? I don't know. Before that, it was trying to look like it wanted to go higher. You got big upside volume, and it's just kind of pulling back. Again, you see this 20-day coming into play, and you know, maybe that's just maybe it's just a pullback. But this stock, I have to admit, I haven't been totally thrilled with overall. Somebody asking QCore, does anybody have any idea what's going on? As I was pointing out earlier, there's been some chatter coming out of some, like Muddy Waters is one of these bearish reports that comes out, and I guess that's what hit it yesterday. But you know, I would say that I don't really like this. So, you know, if you bought into any of this, I would have been selling right away because it didn't hold up. It should have held up. So if I bought into this move here and it did this, I'd probably just blow it out. Then it pulled back, and maybe you could have tried buying it off the 20-day moving average, but it didn't hold that, and so it doesn't look right to me. You got a couple of gap ups in the pattern. I think there have been several on the way up. It's had a big move, so maybe it's going to build a base, but this to me is troublesome. Dr. K, your take on that?
Yeah, I mean, basically, when it has that sort of a huge move down on volume on news, that it's a red flag. And that means we could see heightened volatility in this name in the days ahead. I'd probably be selling it if I had a position right now. I saw it when it came off yesterday, and it started coming off in volume during the trading day. And if I had any of it, I would have sold it right at that moment. Just get rid of it, because as you can see, it went all the way back down to almost to its 50-day moving average.
It's still holding the lows of the Bible gap up day, but you know, so far, and the 50-day moving average so far. But
yeah,
you know, we'll
it doesn't make me comfortable. I'd rather wait for it to have another pocket pivot, clean the slate.
Dr. K, any specialty ETFs for this MDM signal? I think if you had any, you would have put them out in the email. But I don't have any specialty ETFs or emerging market ETFs, European ETFs, or commodity ETFs myself. So, you know, what's your take there?
Yeah, I mean, you generally the ETFs you want to be involved with are the ones either with low risk, and those would be like the S&P 500 related ones, or the ones that give you more reward, which would be Russell 2000 related, since that tends to outpace the other averages, you know, trends.
Yeah. So I don't know. But so the answer then is not really.
Yeah, we put out suggested ETFs with the last report, so you know, there wasn't anything unusual in that list. It's pretty much typical.
CBRL, Cracker Barrel, stock's way up there. You know, here's I guess a pocket pivot here. If you wanted to buy it, I guess you could buy it, but I got to say, not really a stock that I consider all that dynamic. And it's already had a pretty big move. Next quarter, they're expecting negative 7% earnings growth, so I'm a little skeptical there. So to me, not really a quality name. Amazon pulled all the way back to the top of its prior base. Let's look at a weekly chart. You can see that here's a breakout here, all the way back down, bouncing off the lows. You got this sort of pocket pivot move here, but not really one I would buy into. It's hard to say. The stock looks to me like it's just kind of bouncing around and forming a base. So it's not a name that I'm really interested in owning right now. I would have preferred to have bought it down around 280. At this point, you have a bounce off of here, and not clear to me that there's a buy point in here. But if you own it, you know, it's holding in there, but it's really not going anywhere. Do you think the end of QE may bring the market back into a more trendable behavior? It seems that MDM and IBD confirmed uptrend are lagging indicators these days because of the uncertainty in the market. What do you say, Dr. K?
Yeah, absolutely. This QE has been manipulating markets higher, but the way they make their moves higher is very it's very anemic, and so that would explain why, from what we've observed, guys who've been trend following for many decades are having the toughest time of their careers. That, you know, starting in 2011. And as people know, 2011 was fraught with a lot of choppy sideways action that people were throwing in the towel, by the mid-year. And we did very well that year because we caught a couple of the prominent trends, especially in silver.
Like silver.
One trend to make our year, and so then we go to 2012, and there was nothing of the sort that was really visible and playable. So 2012 was even tougher a year than 2011 because of that.
Yeah.
And then this year has been like the stealth bull where the markets are up 15 to 20% on the year, but they do so in this baby stepping fashion. If you look at that first quarter in the NASDAQ, for instance, the average was up, but I remember the trend following wizards, which are a group of market wizards that are tracked, were all down that quarter. So that tells you that these uptrends are not normal uptrends by which top trend followers make their money.
No.
And
but once QE is over with, Dr. K, when do you think we'll return? We will return to normal trending markets. Can you pinpoint that? Can you give me a date and a time, please?
Well, if the Fed were to turn off the switch tomorrow, that would be the best thing, because then the markets would have a nice correction, which we could play, and then they would resume their what they should do, which is probably to uptrend with all the crap being pushed out of the way from all this manipulation. So I think again, it's just a matter of looking at price volume action and not trying to predict when the Fed's going to do whatever they're going to do.
Right. But we would hope that once QE does end and its distortive effects on the market dissipate, that we would hope that markets return to normal. So at some point we would hope so. But you don't know for sure. You don't know when. So somebody's telling us CBI.
Keep in mind, their bag of tricks is deep, runs quite deep. So I think what we need really to see is concerted turning of the corner in the global economy, and we're starting to see signs of that. So if that can persist rather than be just a short-term blip, then that obviously bodes well for markets.
Anyway, somebody mentioning CBI, bottom fishing, pocket pivot. Yeah, we mentioned these on Monday actually, in our pre-market pulse. Mentioned this one as a pocket pivot, bottom fishing pocket pivot, and that's had a nice move. My view is you can take your profit here. The other one that did it, EXP, had a little bottom fishing pocket pivot here, but no real big movement here. I guess these are Tuesday morning that we talked about them, and they're moving up, but I'm not sure what else to tell you. I think if I bought the CBI, I might be a seller here and take the quick profit. But this is the type of stuff that I definitely look for. Stocks rounding out the lows of bases. If you look at CBI was trying to, it's still kind of sloppy, but you have a nice move. Maybe that's going to be it, and it's headed back to the downside. Let's see, Yahoo. Someone's bringing up. Is it a buy? I don't know. You could have bought. I guess you had this gap move here. You could have bought that. It went nowhere. It's trying to move higher. I'm not a buyer of Yahoo. It's moving higher. It's kind of slow, but. I'm not a buyer, but if you want to buy it, I guess you could, but I don't know if this is the place to be buying it. Is this a breakout from a, here's probably along here would have been the breakout along the highs of this range here. So if you look here, you got a little, here's like a pocket pivot, but you're extended from the 10-day moving average. If you look along here, here's a bottom fishing type pocket pivot, but that fails right away. So not too exciting. And the thing comes in and blows down to the 50-day moving average. Doesn't look like it violates it. Now you're back up. So you're extended. I don't think the stock's a buy here, even if I did like it. So ULTI. Is this Ultratech Ultimate Software? Here's a pocket pivot right here. I don't know if this stock thrills me. It trades almost nothing, like 156,000 shares a day. So it's not something that I play with at all. Earnings were up nicely, up 62% in the most recent quarter. You have a pocket pivot here. Probably better off buying it closer to there. I don't know much else beyond that. Stock's trying to form a base. That was your last buy point. So it's a thin stock, so not something I would traffic in. 5, that had a viable gap up yesterday, and a volatile stock, it's coming in. So this is not what I would buy because it's pretty thin and volatile and on the gap up move. But it's a nice viable gap up if you want to traffic in a stock that trades 600,000 shares a day and is pretty volatile. But it's coming in, so all you know for sure is if your low is 46.01 on the gap up, then that's your stop. If you want to add a couple of % of porosity, go for it, I guess. But for me, I'm not really interested in playing this one. But I think it's pretty clear cut in terms of the pullback and what you're faced with if you own the stock. And it's simply that if you break this low, then you're selfed out. So not too much to think about in terms of understanding the rules of viable gap ups and implementing them. I mean, we don't really have a crystal ball, so I can't tell you if this is going to hold up and you shouldn't sell it because it's going to break down through 46 and go crashing down and fill the gap. I have no idea. I wish I could tell you that because then I could short it and maybe make a little money. But that's just the way of the market. There's no crystal balls. Trulia, I got to tell you, Trulia and Yelp win the prize for the two most freaking volatile stocks in this market. Let's pull up here we go. Let's pull up. Here's Yelp today. I love this. Okay, off the opening thing, rallies above almost to 66 pre-open, and right at the opening it's up there, and then boom, they slam it down below 64. Rallies all the way back above 65.50. Well, actually, rallies almost to 65.50. Then boom, they smack it. Rallies back up a higher high, but boom, they smack it. Now you're fluttering along the lows along 64. I think the stock needs to pull into 60, somewhere around there on on a pullback maybe to the top of the base. The bottom line is we were buying this one here along the 10-day moving average, so you're up now good, not quite 20% from there, maybe 15, 20 at least, I hope. And you're up there, and I think this breakout, the standard issue base breakout, it's a cup breakout, I guess. A little too obvious. I would look for a pullback into 60 from here. So, but it's pretty volatile. Trulia is the other one that's nuts, and let me pull up the 5-minute on this one. I love this one today. This morning, right about the opening, they slammed this thing, and it heads down to a low of 44.80. About 7-8% below yesterday's or this morning's peak pre-open, and then it rallies all the way back up to the high, and then now we're breaking down again. We're below 46 right now. This is nutty, but my view is this. We bought this thing in here. If you saw the pocket pivot here, the little pullback gives you an opportunity to jump in. Boom, boom, right to the peak. And I'll actually take this and, I'll trade out of it and sell and take a profit myself. Now you pull back. It probably needs to go sideways if it's still viable. But it is quite volatile, and, that one along with Yelp on an intraday basis are nutty. And they're tough to deal with, when you have that kind of action in a stock. It's tough to deal with. And it's just the way of the world with these two stocks. Yelp has had a good move. I think it needs to take a break, and I would be very happy to see it come into 60 where I might buy it depending on how it's acting at that point. But to me, it looks like it needs to pull in. Both of these need some time to back and fill a little bit. But nutsy cuckoo, as my trader likes to say. Crazy, I think that's one of his other favorite terms, with an L instead of an R. TripAdvisor, I don't know, it's a short. How's that? You have this big breakdown on massive volume off the peak, and now it's rallied up here. It's running into resistance. I'm not a buyer. Would I short it? Yeah, I don't know. It's probably a little tricky here. Let's see. What are we moving in? Let's see. ADVS. What is this? Advent Software. I don't want to touch this with. It's not even close to a roundabout. I mean, the thing with a roundabout is just look at this thing. Is this rounding out a base? Boom, you get this massive volume breakdown here. You get another break here on a reversal, and you're basically in a bear flag. That's not a roundabout. Something that's doing this is more as it's coming around here and trying to round out a base. That's rounding out more of a base. If you look at this, this is not rounding out the lows of a base. This is basically, in shell shock land after getting pummeled. And so there's a huge qualitative difference in terms of how you interpret charts here. And you're interpreting this well, you're pretty well off the mark in terms of looking at this as a roundabout. But trying to think about, what is the term roundabout? It's got to be rounding out, and this isn't really rounding out anything. It's just
And
kind
even
of like,
if it was rounding out later on, it did gap down. So I generally
yeah,
stay
it's pretty
gap
grim.
down until they
You want to
really
see stocks. If you look at GDD back in here, it's trying to round out, and trying to settle down. Selling the volumes diminishing here on the right side as it starts to come up on the pullbacks. And it's rounding out. You can look at some others. Look at NSM back in here. This was a double bottom type thing, and it was trying to come up through here, and is trying to pull out of here a little bit better. OCN is another one that was trying to do a similar sort of thing. They're a little more coherent. There aren't these breakdowns, so it's not every pattern that's broken down and then is going sideways, because the prior action can actually be indicative of a great deal of weakness. They're generally trying to round out to some extent. But you can always, if you have trouble interpreting that and you're looking at a stock, you can always email us and ask us whether this or that looks like a roundabout. Illumina, you had a breakout. It wasn't on heavy volume. It's just a breakout. If you want to buy the breakout along with everybody else who reads IBD, go ahead. To me, this stock, it's had a pretty long run. The earnings are not too bad, but they're not spectacular. So I don't really know, where this thing is going from here. It's tried to move higher several times. The gap up here, and it's kind of come in. So I guess there really were no buy points along here. So I don't know. You could buy the breakout, and if it holds, then you're fine. Otherwise, it doesn't really thrill me. How about you, Dr. K? Does this thrill you?
Yeah, it's not at the moment. No, I mean it did get clear support at its 50-day, undercutting the lows of the gap up low, and I might get interested if it has to get obviously some sort of momentum going. I just don't see evidence of it yet. So it's kind of
when you come up the lows of the base, that seems to be about it. So, but it's a breakout. If you really want to buy the breakout and you believe in breakouts and they've worked for you well in this market, they haven't for me.
It's a tough market for breakouts, and the earnings also has been slowing down. So you want to be buying the best, and this isn't.
Let's see. Looking at some questions here. Any juicy questions? Let's see. Can you consider the Baidu breakout viable yesterday? I don't know. This you're running up into some overhead. The pattern's really kind of a big ugly thing here. So I don't know. You could have bought maybe this Bible gap up here, and you'd had success there. I guess if you want to buy it, you can try it. But if you're asking me, is it viable in the sense that I can tell you that it's going to go higher? Definitely. I don't know. But if it's a breakout and you like buying breakouts and you think that they work in this market, you can always try it out. And if it doesn't, if it fails, you're out pretty quickly. But for my money, breakouts are not really the things to be buying. So that's just my view. NDLS moving, webinar effect. It's moving. Look at that. Wow, I think I'll sell my position now. Holding a little bit of this thing. Trulia off TP. Well, here's your pocket pivot down here. This was not really a pocket pivot, I don't think. You're a little bit extended from the 10-day moving average, and you're pulling in. So like I was saying, it might need more time. But today is not a pocket pivot. This was not a pocket pivot yesterday because it was extended from the 10-day. DRX. Valiant. Broken down. It's just trying to hold up. There's nothing spectacular. Here's your breakout. All it's doing is plodding around back and forth here. So there's really nothing here actionable. GMCR had a breakout and it's just pulling in. To me, it seems a little bit slow here. I don't really like this. You have this pocket pivot barely, but I think by 1,000 shares right here. And it didn't hold that. And so now it's pulled back to the top of the prior base. But it's just kind of flopping around. It doesn't really thrill me, I got to tell you. LinkedIn's pulling in pretty good today. You had the pocket pivot here, so you're holding above that, and you're just back and forth. Now, one point I might make about LinkedIn is they did do the 5.38 million share secondary offering, and to some extent, you might say that that has absorbed demand for the stock in the near term. So a bunch of institutions bought it. Probably not likely to be trying to load up on it just yet. And you notice it has been moving higher. If you look at since the pocket pivot day, you have this up day and volume was less, and now yesterday it was up and volume was less. So it could pull in and maybe spend some time backing and filling. That's a possibility. But it's still acting okay. There's nothing wrong with it. My only feeling is that it may simply have to take some time to digest that 5.38 million share offering, and so it might just kind of track sideways here for a little while. X1 is a good example of why you have to use tight stops around moving averages. Exactly. If you guys remember, I don't know if it was a week or two ago, maybe a couple weeks ago, or even in the chat room, I noticed, it's pulling back. You see this volume here, and that's 7 days ago on the chart, and it's pulling in and tucking into the 10-day real tight. I'll actually come in and buy a small position there, looking for it to come off, and then I'll get a little more aggressive. And as soon as it started to move the next day a little bit, and as soon as it breaks down through there, I'm just going to sell it because it's not doing what I think it should be doing. And you guys know that I operate on the basis of developing a thesis about a stock. If I think it's going to pull in, remember a few weeks ago I talked about Triple D, and I think right smack in the middle of the webinar I said right here, this drying up, pulling into the 10-day, buy a little here, and boom, the thing's off and jacking to the upside. The next day, of course, earnings come out, and no, that's not true. It actually ran up and then came right back in. Earnings came out back in here. But that sort of move, when I see it, I'll buy a little bit. But my theory is that it should get moving. If it doesn't, or it starts to break down, I'm gone very quickly. And I do think you need to operate that way if you're going to try to buy these little tuck-in sort of patterns where a stock tucks into a moving average on really light volume. You can see on X1 that didn't happen. I thought maybe they would price their secondary. If it went well, you might see the stock come off here, but that didn't happen. They actually priced it at 62, which is a real, that's not a good sign. And the stock's violated the 50-day moving average 3 days ago, so you would have at least been out there, and now the thing's breaking up. And I think the group in general, I don't like the group, and I've said this on the chat room more than a few times. I think the group has had a big move. It's a little bit tired. You see 3D. Even Stratasys has, coming off. So the group's tired, and I wouldn't be playing in this sandbox. Is Cree rounding out? Cree is not rounding out at all. So again, is that a joke? Stock gap down and it's trying to rally. My theory, and I was talking about this on the chat room, is that if you look at the pattern, get your shoulder here, your big head, and now you've come down into a neckline. So let's draw this. Let's get my handy dandy. And so here's your neckline roughly, and you come down into the neckline. Now it's logical for it to bounce and form a right shoulder. And so I was actually telling people in the chat room that you could trade this thing for a couple, $3, maybe a little more, off of this low here, based on the fact that it's a left shoulder and a head. It needs to form a right shoulder, so the theory there is that that's what it's going to do. And that's what it's doing right now. This actually might become shortable again as it continues to form out the right shoulder, but this isn't even close to a roundabout pattern, so maybe I'm going to have to do a webinar on that. Is AMBA a buy? No, I wouldn't touch AMBA. I hate this stock. Ambarella, it's all over the place. It's volatile. I don't consider it a buy. Does anything thrill Dr. K? Does anything thrill you, Dr. K?
Not a whole lot in this market.
Not a whole lot in this market, says Dr. K.
You're
kind of are you warbling?
It's been tough for trend followers. It's been tough for people who buy the leading stocks that go up, 3 steps forward and then two and a half steps back. Sometimes more, just enough to get you out of your position. So, what thrills me, I suppose, is the closure or the tapering of QE, and actually seeing more definitive action on the part of the Fed, that tapering will occur and will not only occur, but will also have a point at which QE no longer really matters.
So that's what thrills you? Okay. I thought a good martini would thrill you, but I guess I'm wrong. Let's see, INVN and VenSense, somebody's asking about. Uh-oh, looks like my screen froze for a second there. INVN, let's take a look here. You know, doing what it always does, somebody's put out a $21 price target on it. They didn't get the design win for one particular chip on the new Apple iPhone. STM Microelectronics got it. But they're pushing it up. But you know, I don't know. This thing's had some pocket pivots. To me, it's just kind of erratic. I don't really buy it. I'm not a buyer. LL Lumber Liquidators, nice move up to the 100 level the other day. It was tight along the 10-day moving average. Again, this is a situation where you see something getting tight along the 10-day volume is drying up. You can take a position and see if it starts to move. Now it's through the 100 level and it's extended. So not a buyer here. So that's pretty much where I stand with that one. You had to be buying along the 10-day. So Facebook is just extended. There's no buy signals. The last buy signal was this pocket pivot breakout, which we mentioned. Now the stock just trending higher. It's pretty steady upside trend and looks pretty good. And it's just holding up. So there's really nothing to think here. Already talked about LinkedIn and Yelp. Is Dr. K thrilled that InventSense is at a new high?
Well, I think, as I've said, it's a stock that seems to be working with its 50-day. Other than that, it tends to it's one of these moves 3 steps forward, 2.5 steps back type of stock. So I'm not really thrilled about buying it up in here. I would wait for some sort of consolidation and a pocket pivot to get in. If you want to buy it here, just be prepared to be able to hold it down to the 50-day.
Right, and you've got you know, somebody helping to push it up today with the buy recommendation and a $21 price target. So, you know, I don't know. Let's see. People are asking questions like, you know, what are your percentage increases? How invested is your portfolio? I'm not really going to go there. All I can tell you is I'm up pretty decently in my own account this year from trading heavy positions and trading aggressively and taking profits when they're up. Other strategies have not worked so well. The market direction model has not worked so well. Pyramiding strategies with stocks have not worked so well. And you start getting into what percentage you're invested at. Yeah, I could be 200% in one day and in cash the next day. So, and I know most of you won't understand that. You'll sit there scratching your head. So to even go there is pointless. And it thinks in terms of this sort of static approach to the market where you're ramping up your percentage invested, you know, at certain points and pyramiding all this stuff. That's really hasn't worked very well in this market. My view is you have to be aggressive. You have to take early buy points when maybe most people aren't willing to buy stocks. You know, using roundabouts, using pocket pivots lower in the base, and then selling into sharp upside moves. That's the way I've operated, and that has worked in this environment. Anyways.
Yeah,
so what's the stop on Lulu?
A lot of the old rules are not working in this environment. A lot of indicators have
right.
stopped working in the QE environment. So you know that necessitated, for instance, the pocket pivot in 2005 when base breakouts hadn't been working for
right.
almost 2 years. So you know you got to remain flexible, and if you're not willing to change with the changing market, then I would say just stay in cash. And
right.
When the window opens to your style again, when the market reverts back to that, then go back in.
Right. So someone's asking, what's the stop on Lulu? Well, the intraday high is a stop. You know, you can use that as a reference for the stop. What I'll do is, as it's rallying, I'll put out little bits and pieces, and you know, if it's going to continue rallying, I'll just blow it out by the end of the day, and then see where it sets up the next day. But like I was saying earlier, you don't know exactly where the intraday high is yet because it's still relatively early in the day. You're a little past halfway through the day. But if you're not, you know, if you're going to put some out, you're expecting instant results. You got to kind of work this. So, and you know, the other thing I'm going to point out is don't be some robot that you're going to short a stock because somebody says do this and use this as your stop because you don't know what your stop is yet. Basically, if you're short, you know, around 64 80, for example, well, you're down 1% on the position. Whoopie-doo. You want to let it go to 2 or 3%? I guess you could do that. But for the most part, you're kind of watching to see how it acts and giving yourself some percentage if you're going to put out a position here. But I'll start trying to put it in on the rally and just kind of work it. If the stock's persistent on the upside, then I'll just run and cover the thing. It's not really rocket science. So let's see. Are you currently shorting gold on multi-day swings? No, I'm not shorting gold at all. Anyways, what are we at? It's after 10, so we've gone for an hour, and that's pretty much all we've got. You know, my personal view here is the market's in a position where it's going to back and fill. I would not be aggressive buying stocks. There are a lot of extended names, and I think that if you're buying into things here, you're late, and I think you got to wait and see how any pullback pans out. So that's basically my view. Dr. K, you got any final words to offer? Words of wisdom?
Just, you know, it's a tough market, and it's good that tapering is going to start sometime this year. Price of precious metals seem to be telegraphing that. And in the meantime, you know, if you're going to invest, you know, keep it to the best names, only the best names. A name like Tesla is incredibly rare in this environment, but all you need is one Tesla to make the difference in your performance for the whole year.
Yep, that's it. So anyways, that's all we've got. That's where we're at today, and we'll catch you guys next time. Take care.
So long, everyone.